Okay, welcome back to this session about bank reconciliation. So first of all, we need to understand the terms that we use, right? So what is a bank reconciliation, or in general, what is a reconciliation? So in a reconciliation, you are trying to make two sets of data agree. For instance, we have this cash book and then we have this bank statement. So the process of making sure that these two balances, this bank balance and the cash book balance here, agree. So that process is called what? The reconciliation. So a bank reconciliation is simply a reconciliation between your cash book balance that is in your ledger or in your Excel and your bank statement balance. So ideally, these balances must be equal to each other. Okay, cash book balance must be equal to bank statement balance. But then there are reasons why these two do not agree. Okay, so what are these reasons? Okay, the reasons are number one, we have outstanding checks. Okay, you find that we have recorded in our books some checks, but um, the, the the recipient of that check or the payee has presented to the bank late. As a result, that check will not appear here. Okay, so that's number one reason. That is outstanding check. So these are checks issued by the company, but they have not yet been presented at the bank, or the payee has not withdrawn the money. So it will show as outstanding check. So that's one of the differences. The other difference is deposits in transit. For instance, here, if you make a deposit, let's say a sales deposit of 1.2 million, you make a deposit today, that is let's say today is Friday, okay, and then in your cash book, okay, you have received cash, okay. So in your cash book, you say, okay, I have received 1.2 million. You record this 1.2 million in your books or in your cash book, but you delay to deposit the money at the bank. So you have what? Deposits in transit. Okay, so these differences arise as a result of a timing difference, right? And then we have bank charges. So at the end of each month, the bank will charge you what? Um, a certain fee for as a reward for maintaining your what? Your account. Okay. So we have bank charges, right? So that's also one of the reasons the accounts will not what? These two balances will not agree, right? So the other reason is direct credits or EFT receipts. Suppose your customers pay pay direct to your bank account, but you are not aware of that. So what do you do, or what happens? So if the customers pay direct to your bank account, what will happen is that um the your statement will show a deposit, but your cash book will not show any entry because you are not aware of that. Up until you become aware of that deposit, that's when you record um that transaction in your cash book. So that's what it means when we say um, direct credit or EFT receipts. So these are receipts um, or deposits done by your customers without your knowledge. Okay, so after looking at the statement, that's when you know of the difference. And then you have standing orders or direct debits. So these are payments which are made on behalf of the organization. These are paid by the bank. Okay, so it's only after the bank makes the payment that's when you record in your cash book, right? So the opposite of direct credits are what? Direct debits. And the same with what? Standing orders, right? So this is also the reason. the two sets of records will not agree. And the other reason is errors. So we can have errors on both sides. Okay, you can have errors by the bank instead of let's say instead of putting this transaction the amount as 900,000, this they put it as what 9 million. So that's the error, and at the same time by the company or the client, uh here instead of recording 850,000 you can record it as what 85,000. So errors contribute to the what to these two balances, not what not agreeing. Okay, so how do we make this reconciliation, right? So this reconciliation is simple. So what you do is you match transactions which appear both in the cash book and the bank statement. Okay, so let's start the reconciliation. I'll give it those transactions which match. I'll give them a color of green, and those which do not match, I'll leave them like that, and then we can categorize them according to what? According to these terms: outstanding checks, deposits in transit, bank charges, standing orders or direct debits, and then we have what? We have errors. All right. So let's start. Um, That's our opening balance. Okay, so let's start. We have sales receipts 1.2 million. Let's see on the statement. Yes. So I'll give it I'll give it a green, and also that one I'll give it a green. And then we have check 201 850,000. Let's see. Let's give it a green. Yes, we have it 850,000. Okay. And then we have customer EFT Mr. Banda 900,000. Here we have customer EFT Mr. Banda 900,000. Okay, I'll give it a green. And here again, I also give it a green. We have check number 202 600,000. Here, check number 202 600,000. Yes, I'll give it a green. And also this one, I'll give it a green. We have cash sales 700,000. Let's see here. Cash sales 700,000. That's a deposit. Yes, I'll give it a green. And here again, I'll give it a green. We have check number 203, 120,000. Here check number 203, 120,000. Yes, I'll give it a green. And then here also what? I'll give it a green. And then we have customer check, Mrs. Piri, 450,000. Here what do we have? Yes, 450,000. Okay, we have deposits. And then there we have receipts. Okay, 450,000. We have checked 204, 300,000. Let's see here. 204, 300,000. Yes. And also here, here there's 300,000. And then we have supplier B 205, check number 205, 520,000. Let's see. Yes, we have 520,000. And also there we have 520,000. Then you have deposit 500,000. And then there we don't have that deposit. Then we have check number 206, 180,000. There we don't have 180,000. All right. So these greens are the ones which have what? Which have agreed. Okay. The cash book has transactions which are also on the what? On the bank statement. Right. So now let's focus on the transactions which are not on either side. Right. So let's start with the uh cash cash sales, deposit cash sales. This one is not on the what? On the on the on the statement. So what will happen is this is a deposit. So what do we call this? So this is a deposit in transit. Okay, so let's go here. How much is the deposit in transit? We have a deposit in transit of 500,000. All right. Let's go back. Okay, let's go back. Then there is a check number 206 office supplies. Okay, this one is not on the statement as well. Okay, 180,000. So this is what? Unpresented check or outstanding check. It has been issued, but it has not what? It has not been presented to the bank. Huh? So this one will be what? Outstanding check. Okay. This one will be outstanding check. Right. So let's go to the statement. Let's look at the items which are on the statement, but not on the what? On the cash book. Okay. So here we have bank charges, 15,000. So let's go here. Bank charges. How much? 15,000. Okay. So let's look at the other transaction. We have a standing order, that is insurance. Okay. A standing order insurance. So this is a direct debit. Okay. It has been paid on our behalf. Okay. So that standing order we go to, okay, that's our standing order. And then we have this one, direct deposit. Okay. So a customer deposited direct to our bank statement, but we're not aware of it. So what do? We go to direct deposits, or direct what? Credits. Okay. So go to that. That's uh, a direct deposit. Okay. And then also under the same direct deposit, we have interest income. Okay. Go to the statement. There's interest income, this amount. Okay. So we have received interest on our statement, but we're not aware of it. So how do we record it? Okay. So that is what? Our interest income. All right. So how do we now make, there are no errors? Obviously, there are no errors. Otherwise, we could have been taught of errors, uh, which we could have clearly seen, or the question could have shown us that there are errors, right? So, how do we now make sure these two balances, these two agree? This bank statement and this cash book. Okay, so how do we do it? So you go to this one, and then you can say, let me just say remove the word bank reconciliation. Then I'll just say cash book, cash book balance. How much is the cash book balance? Cash book balance is 3680. Okay. Okay. So we need to manipulate these figures. Okay. So for the for this for this cash book balance to agree with the statement balance, what should we do with these? Okay. For us to do with what we should do with these would be like this. Okay. So for the outstanding checks, this one, um, since it was already subtracted from the cash book balance, we what? We leave it like that. We add it. Okay. Then we have deposits in transit. So for deposits in transit, it means to this balance we added. So what do? We credit. Okay. So we credit. So what do we do? Deposits in transit. Just a minute. Deposits in... Okay, just a minute, just a minute, just a minute. Sorry, on the deposits in transit, I made a mistake. It has to be one, not from the bank statement, not from the bank statement. It has to be one, and then the direct uh, credits. That one we add the interest received. Okay, we add that one. Right. So on the deposits in transit, that one we already added here. So what do? We subtract. Okay. For the bank charges, what do we do with bank charges? Because we have not recorded them in our books, what do? We, we, what do we do? They're not in our books. What do we do to bank charges? We subtract. Okay. We subtract bank charges. And then we have um, direct credits. Okay. So these are deposits in our bank statement. Okay. So what do? Um, we add. And then the direct debits, we what? We subtract. Okay? We subtract. All right. So the result we find here, should be equal to that, to the bank statement balance. So we say bank statement balance. Okay. So let's add. Let's add. Okay. So this balance should be equal to minus the statement balance there, which is 0. Indeed, that's how we, indeed, this is what? This is correct. And that's how we do what? We do bank reconciliation. There are so many ways of doing this reconciliation. There are so many ways of doing this reconciliation. But this is how simple a bank reconciliation is. Thank you for your time. Bye-bye.